Welcome to CRE Fast 5. I'm Iacono, and tonight we are diving into the net lease auto parts sector. When investors target investment-grade tenants, this is a part of the market that is often overlooked. In fact, the three leaders in the space, Advanced Auto Parts, AutoZone, and OReilly Auto Parts, are all rated investment grade by S&P and may be a good option if you're an investor looking for stability or a long-term hold. I'm going to begin tonight with an overview of these three leading companies and then give you some stats on this market segment as a whole. Let's start with Advanced Auto Parts. Advance has 4,265 locations and an average store footprint of 7,500 square feet. Their leases are typically double net, meaning that there will be some landlord responsibilities. In addition, the base term is usually flat, which indicates that your rent will not change until the option period, if that. Now, in terms of performance, despite regional differences in sales due to the COVID-19 shutdown, the full year for 2020 for Advanced Auto Parts was very positive, and they reported overall sales growth of 4.1% across the portfolio. Interestingly, the fourth quarter sales increased 12%, primarily reflecting growth in their DIY business. Overall, it was a very good year for Advanced Auto Parts. Now we'll move on to AutoZone, which has an S&P rating of BBB in 5,861 locations. The average store is about 6,590 square feet, and they have a variety of lease structures, so be sure to read the offering memorandums carefully to determine the differences. Typical rent bumps are 10% every 5 years throughout the base term and option. AutoZone's Q2 concluded in February and reporting came out at the end of March, so we have plenty of fresh data for them. The most recent quarter, they showed that overall auto parts sales advanced about 16%, primarily driven by same-store sales growth as well as the contribution from 164 net new stores that they opened last year. Domestic commercial sales, which represent about 22% of their total portfolio, increased 15% as well. Another tenant clearly that had a fantastic year. The third and final tenant we'll be spotlighting tonight is OReilly Auto Parts. OReilly has 5,613 locations and an average store size of 7,000 square feet. Their leases are typically double net with a flat base term, similar to Advanced Auto Parts leases. The company managed to deliver significant top-line growth in fourth quarter, with sales increasing nearly 14% to $2.83 billion. Their increase in revenue was primarily driven by store-based growth, pent-up demand obviously, and some recent acquisitions. O'Reilly's opened 156 new stores in 2020, with another 165 plus slated for 2021. As you can tell, all three tenants performed better than expected in 2020, and no real headwinds have been noted for 21. Now let's take a step back and look at the sector as a whole. In the fourth quarter, national asking cap rates for the single-tenant auto sector decreased 48 basis points to 5.89%. Remember that as cap rates go down, prices or values go up. However, note that this cap rate compression does include service and collision centers, which led the pack in new development last year. In general, new construction with longer-term leases will drive cap rate compression no matter the sector. The overall trends in the space are interesting as well. Surprisingly, there were more cars on the road in 2020, 280 million from 278 million in 2019. However, the total miles driven fell about 10% as expected. The average age of the vehicle on the road is increasing. We're now at about 11.9 years, which is an all-time high, but that's predicted to rise to 16 years as an average age by 2023. So this trend bodes well for continued strong demand of aftermarket parts. There are a few challenges to the auto parts industry that I hear discussed frequently. The first are, of course, electric cars. Electric cars do pose a slight threat to the current business model of these players. However, the the adaptation seems to be a little slower than we expected, and we don't really think that in the next 5 to 10 years we're going to see really increased penetration to the point that these auto parts companies will not have time to adapt. The second concern I hear is the Amazon effect. So we talk about this all the time. What competitive advantage do these retailers have against Amazon? For these three tenants, I would point to three different things: supply chain control, data integration, and service. On data integration, there are an incredible number of variables when determining if a specialized part will work on a specific vehicle. The leaders in this space have deeply integrated parts databases that match parts to each individual car, make, model, and year. Obviously, this is something that Amazon could undertake or purchase. However, it doesn't work well with the third-party retailers and other vendors on the Amazon platform. In terms of customer service, stores like AutoZone and OReilly's invest a ton of money in training their staff to help customers with often detailed and highly specific questions about their cars. So that's a service that e-commerce giants like Amazon are not yet in the business of providing, which is a good competitive advantage for those tenants. In addition, there's often a time pressure element to a repair. So waiting for shipping, even if it's next day, may not be possible. So I'm not saying that Amazon will never be competitive in this space, but for now, AutoZone, Advance, and OReilly's have a distinct advantage. If you are evaluating an auto parts deal as an investment, or you have a property that you're looking to sell, please give me a call and we can further discuss these tenants and the many other factors that impact your investment. That was CRE Fast 5. I'm Carly Iacono. I look forward to seeing you again next week.